Good afternoon. A warm welcome to each and every one of you to this disruptive sessions. My name is Sven de Bond. I'm head of development of Alides, and on behalf of the Antwerp Management School and the Real Estate Society, the Alumni Association of the Master in Real Estate Executive Education, I warmly welcome you to this debate, and I will be your host for this session on climate change, the ultimate disruptor for real estate. Firstly, we have foreseen a presentation by Benjamin Towell, who is foreseen to take about 50 minutes. And afterwards, we will be entering into an interactive debate with Benjamin. As this is a Zoom conference, we are confronted with some limitations. And as this is the webinar function is active, the attendees are muted. But nevertheless, I kindly ask you to add your comments, questions, or thoughts in the chat, and I will use them as an input for the discussion afterwards. During the debate, we will use the polling tool to present you with some questions, and the results of those questions will also be used during the discussion. As a main speaker of tonight, I am delighted to present you to Benjamin Towell, who will give a talk on his views on the impact of climate change on real estate. Benjamin is an architect based in Singapore. He's associated as a fellow at the Royal Institute of Chartered Surveyors, and he's greatly involved in different sustainability initiatives. He contributed to several building rating tools and authored several books on sustainability. He is involved in influencing sustainability policy globally, and I am warmly welcoming him to give us his presentation and views on the matter.
Thanks very much. I hope everyone can see the slides. Okay, so as mentioned, we'll try and keep the bulk of it to kind of warm everyone up before we go into the discussion proper. So I'll start off by going through a little bit about the context. So before I do that, the first poll will pop up just to kind of get a sentiment of the room, and that is, Sven, if you could launch it. Do you think that climate change, will have a significant impact on real estate values in the next 10 to 15 years? I'll be quite interested to see what the answers are for people in the room, so I know how to pitch the rest of the presentation. So this is really more for me than it is for you. Are the results in?
The results are in.
There we go. Okay, so there's a few undecided and a couple no's. So let's see if we can convince you as the presentation goes on. I think we can launch that at the end just to see how that works. Okay, so first of all, let's start with a bit of an overview about climate change. I'm not going to spend too long on it because I think we should all be fully aware of what is happening to our climate at the moment, and the news articles that are coming out now in most of the mainstream media. It's fantastic that they are starting to really pick up and report on what's going on. But let's start with what we need to do. So by 2030, we're supposed to reduce our global carbon emissions by 55% from 2010 levels. Now, even though this year's been a very difficult year with, most of the air traffic grounded, lockdowns, across the world in various levels, and thus economies have suffered, our CO2 emissions by year end would still not be even close to the 2010 levels, of which we're supposed to be 55% better than by 2030. So you can see the amount of effort that is required by 2030 just to reduce the CO2 emissions. And even with COVID, we haven't been able to even get close to that yet. So there's a lot of work to do. And then by 2050, we need to be, at a net zero, which is going to be a very tall order in a very short space of time. As a part of that, the way we deal with energy needs to change. 85% of global energy production needs to be from renewable sources. Again, we're not very close to that yet. Good news is investments in renewables is sharply rising, but is it rising quickly enough? At the moment, the answer is no. Beyond those, the way we deal with land and agriculture, the pressures on primary forests, the fact that we are having catastrophic feedback loops with the warming climate on the ability for our landscape and bluescape of the oceans to actually absorb and CO2 and continue to grow and flourish is deeply hampered. So we really need to look at those aspects as well. And then of course the infrastructure. So how do we actually plan our cities? How do we move around and things like that? Even with the Paris Agreement, with most countries signing up to it, bar a couple of outliers, one unfortunately trying to pull out is one of the largest contributors to the issue. Even with all those nationally determined contributions, we're still looking at a 4-degree world. That was a plus 4 degree from the Industrial Revolution baseline, pre-industrialization. And that is, as some insurance brokers have called it, an uninsurable world. For real estate and for other fixed assets. We can see from this graph here, which is the recording of carbon dioxide concentration in the atmosphere taken at the Mauna Loa Observatory in Hawaii. We're on an exponential increase year on year. And, you know, in fact, the growth is rapidly accelerating. If we were to take the annual increase between 2018 and 2019, we would cross the 2-degree threshold, which is 450 parts per million CO2 in the atmosphere by 2028, which means 8 years before we cross the precipice of ecological disaster. Which is quite startling given that we're almost at the end of 2020. Now, although it took a pandemic to reduce our carbon emissions a little bit, the amount of work that we need to do is really quite telling. In terms of impacts of climate change to date, we're living in a world where 2 billion people are already experiencing high water stress. And that isn't just due to population growth, but that's actually due to changing weather patterns, reduced rainfall, and where rainfall's happening in very rapidly and turning into floods. By 2030, there will be approximately 700 million people displaced by such water scarcity. So you can see the impacts that's going to have on people changing countries, immigration, etc. In terms of habitats, what's being measured is we're already having ocean acidity increased by 26%, and that is changing the ecology of our seas. I'm sure many of you have seen the David Attenborough documentaries of late, but again, we're seeing massive species extinction due to habitat invasion, resource use, etc. In terms of actual climate-related costs and disasters, these have been accounted by the UN over time, and they've estimated that, you know, it's already claimed 1.3 million lives above a baseline threshold of kind of what would be expected as normal, which is actually quite a lot. Okay. Change. Oh dear. Okay, let me sort that out. Okay, there we go. It's bound to happen on a webinar. Right, okay. No, it's done it again. Okay, sorry about that. Okay, so when we start to look at the tropics, when we talk about a +4 degree world, we're actually looking at, in the tropical belt where I'm currently staying in, it's looking at heat stresses of above 8 degrees Celsius. And what does that mean? That's been estimated to reduce the food yields in the region by more than 50%. And don't forget, in this part of the world, the urban population is growing at a rapid rate. This is the area of key population growth and also the rise of the middle class. So you can really see the kind of pressures that it's going to be under in this region. Turning our attention to the built environment, there's many urban challenges that we see today. Not all of this is related to climate change, but when you see the statistic that only half of urban residents have access to public transport, there's a lot that needs to happen to improve transportation, to reduce reliance on private vehicles. and to stem that growth. 9 out of 10 urban residents breathe polluted air, and that isn't just, you know, talking about Asian cities or African cities. We're talking about European cities, places like London, which have seriously unhealthy air quality, and other key cities around Europe. 1 out of 4 urban residents live in slum-like conditions, so we need to address this when we talk about climate change as well. And then, you know, in terms of compounding that with everything, there's a lot of people without access to waste collection services as well. So you can imagine the kind of squalor that's happening. Cities themselves, 2% of land area, that yet obviously have a huge impact, given that the majority of our GDP comes from them. Of course, the majority of energy consumption, the majority of greenhouse gas emissions, global waste also. But we have to consider the city and its impact on the rural and untouched natural resources, because you've got the massive material flows into these urban areas, the goods, the products, the materials which require mining, agriculture, aquaculture, water flows, and all of those impacts on the ability for our biosphere to deal with the products of those cities themselves. In terms of the impact of real estate on this, we really need to start thinking about buildings more than just how much do they cost and how much can they transact for, because the majority of our time, even more so, given obviously lockdowns that we've had across the world, we're spending a lot of time indoors. So our indoor quality and environment is crucial. Buildings themselves are responsible for globally almost 40% of carbon emissions. So there's a huge amount of savings that can be made by changing or looking at how we do our real estate, how we design our buildings, how we operate our buildings, and how we demolish our buildings in future. And in terms of the materials themselves, these are responsible for 11% of global carbon emissions. So you can see we're quite a big area which has a large space for transformation. So that kind of covers a little broad sweep about climate change and also some of the other social issues that we have within our built environment that real estate deals with directly. Now we come on to a few of the actions and frameworks that are looking to deal with this. So before that, there is another poll, which is, you know, what do you think is the best lever or best intervention that will generate positive action in the real estate sector to actually start to address some of these issues? So the first one is it at the international level? So international agreements and potentially global legal frameworks, such as using the World Trade Organization, obviously the UN, and other such aspects, you know, the European Court of Law, etc. Is it national governments through their own regulations, you know, where we make better building regulations by saying, sorry, you know, you really need to raise the energy efficiency, you actually need to be net zero carbon by this date, and this is how we're going to do it? Do there need to be business regulations as well? Are we looking at incentives rather than a stick, giving a carrot? You know, you will get higher returns on your business by doing this. We make the cost of being sustainable better. Is it looking at investment funds and financial institution banking rules, for example? And then finally, is it really up to trade associations and business groups such as green building councils or institutes of architects or, you know, other such trade unions or trade chambers? Do we have any results for that?
We are currently at 22 answers on 50 participants. So
okay, maybe we can come back to that one. I think it'll be very interesting to see as we go on. So the first part we'll look at will be the international agreements and legal framework. So looking at the developments in international environmental law. Okay. So in terms of the first instrument, we have the Paris Agreement. Okay, we've got the results in. So government, so looking at incentives and incentivizing seems to be the majority there, with national and international and looking at funds. Okay, that's very interesting. Let's go through and see whether that holds true. And I think that's quite useful reference for the debate later on. When we look at the Paris Agreement, a lot of people talk about it without actually knowing what's in it. They see the headline figures of 1.5 degrees Celsius, etc. But what does this actually mean? So what's stated in Article 2 of the Paris Agreement is what you see on your screen here. So that talks about the holding the increase in global average temperature to well below 2 degrees Celsius, with aiming to 1.5 degrees, as this would reduce the risks and impact. And when we say reduce the risks and impact, it means that we are going to be living in a changed climate. It will be changed from where we are today. There will be looking at the ability of nation states to be able to adapt and to the adverse impacts of climate change, and look at fostering resilience. And that has a special place for small and low-lying islands and how they're supported, as well as making sure that states look at making finance flows consistent with that pathway towards low greenhouse gas emissions and climate resilient development. And you've seen on the back of that many little interventions coming out, and some of those will be explored a little bit later. One of the key aspects of the Paris Agreement is in Article 8, which is it gives the ability to legally address losses and damages associated with adverse effects of climate change through an internationally agreed mechanism. Unfortunately, this doesn't necessarily have as many teeth yet as we would like to see, but it is gaining traction. There are more and more international cases being sorted out through the International Court of Justice dealing with the impacts of climate change going across borders. So there are ways of dealing with that, be it through paying damages or changing the way that countries operate given their material flows between each other. On the back of the Paris Agreement, there is a draft UN Global Pact, which is considered as if it is ever ratified, which would be seen as like a global moment where not since the World Trade Organization has been set up to govern international trade and have ways of dealing with international disputes on that. There isn't a mechanism that could do that at the environmental level, even given the Paris Agreement. And one of the key things in there is Article 1, which is every person has the right to live in an ecologically sound, environment adequate for their health, well-being, dignity, culture, and fulfillment. And this is where the impacts of this into our professional roles will take place, because our work as professionals will have direct impact on the rights of people. So it is that turn to rights which is critical, where climate change will be considered a parallel and equal to human rights. Now we turn to the finance sector. So TCFDs, the Task Force for Climate-Related Financial Disclosures, is a way of looking at the transition to a low carbon or zero carbon environment, and a way for companies to develop more effective climate-related financial disclosures through existing reporting processes. And this will also have a direct impact on how buildings and assets are valued based on their perceived climate risk, because it is that long-term risk based on the cost of financing for the buildings, as well as the potential cost of insurance or the ability to gain that coverage. So with that, you'll start to see stranded assets and things like that. So the cost of finance will go up as more and more of this is reported and funds turn away from risky assets. Beyond TCFD, recently the EU published their Sustainable Finance Taxonomy, which standardizes the labeling of sustainable financial products. And although this is a very EU-centric tool, actually it is considered the gold standard internationally. So even banks in Singapore are looking at adopting the EU Sustainable Finance Taxonomy as a way of assessing their sustainability-linked loans, bonds, and the way they invest in their own funds. So here it's looking at must do no significant harm in 5 aspects and make a substantial contribution to one of the environmental objects, be it mitigation, adaptation, transition to a circular economy. This is still transition, not exactly you shall do it, but there are minimum safeguards that have been outlined, and there is one which is set for the real estate industry which deals with the financing and finance flows within it. Turning to my part of the world in Southeast Asia, banking guidelines may not be as robust, but they are starting to develop, especially in the environment and socially sensitive sectors, but progress is slow. Whilst there's a lot of recognition, there's very little action. As you can see, only 3 banks have adopted deforestation policies, where most of the global palm oil comes from this part of the world. And only 3 banks are TCFD supporters currently, although that is rapidly increasing with more of the banks taking this on board. And that turns to the question of market value. With TCFDs, are we starting to see a shift of how we value things? It's very easy to value real estate as an asset. The international valuation standards, the RICS Red Book, and other recognized standards are, with professional valuers and registered valuers able to undertake this work. But there isn't really that level of agreement or competence when it comes to valuing natural capital, the value of ecosystems. So there are starting to be, RICS is publishing professional guidance to start to fill this void. And in other countries, there has been policy which has intervened. In the city of Melbourne, there was conversations with a tree, which led to a policy which put a dollar figure on every single tree in the city. So if a developer wanted to knock down a tree to build, to clear their site, the trees had a huge value, which changed the way that developers looked to their architect to design on that site, and how they interacted with what's existing on that site, rather than just replacing some trees around the edge. And we were talking about hundreds of thousands, if not millions of dollars at some times. So that really started to shift the market. So are you seeing the market shifting? Are we really beginning to see and understand the value of natural resources? What about the developing world? Primary rainforests are usually there. The lungs of the world are quite often in developing nations. So are we adequately compensating them to preserve them because they have intrinsic value to us? Maybe that's something we really need to start to think about as well. There are already certain payments via the UN and through the Paris Agreement to do this, but are they enough? Because, are other countries losing out by actually not developing their rainforests into coffee plantations, into new cities, into mining operations and things like that? All the processes that we've enjoyed to get to where we are today. I think on the finance industry, the key thing to say is that change is coming. Many of us are involved in valuation, investment decisions, whether as architects, whether as investors, whether as developers, or any part of that supply chain. Therefore, we must be responsive and responsible in our professional advice and practices with regard to climate change, and have that long-term sight of what is actually happening on the horizon, and are our business plans and are our risk management strategies taking place and including that. In terms of the international frameworks, these try and deal with those conflicts of economic growth, social justice, and environmental protection. And these are always in that kind of tension. So as highlighted earlier, the tension between exploiting resources for economic growth and gaining that efficiency of the marketplace versus environmental protection. And then we have the social justice and economic opportunity. We've all heard about the global 1% getting richer while, the rest of us are not growing at the same speed. So there is that poverty conflict and development conflict, and all of this is always in tension. And if you focus on one, it starts to unbalance the other. So where do we need to address that? And it's not something that we can necessarily answer in this webinar, or indeed straight away, but it's those kind of tensions that need to be at the surface whenever we talk about policy and what policies are being made. And that's where things like the New Urban Agenda kick in, which provides those kind of frameworks to, well, we grow, but we leave no one behind. We make sure the economies are sustainable and inclusive as possible, but at the same time, we need to ensure environmental sustainability. But the question is, can we actually do that? Is it possible to grow GDP whilst ensuring environmental sustainability? And I'm not sure that is possible. So these are the details of it in terms of the action. So it's not just about principles, it's about action. So providing adequate housing and shelter, making sure there are public spaces. So it does link to those tangible built environment interventions in terms of policies, planning, and development strategies. It goes through the how, and again, in talking to you in Belgium, you already have urban rules and regulations. In fact, most of Europe does. Singapore definitely does, but there are many countries that don't have these in place or are very corrupt, so they're almost unenforceable. It talks about the quality of urban design and planning. It's not just cost, and that discussion of value is critical. How many times have we been in value engineering discussions about optimizing the value of the building, and it's at the cost of good public realm. Looking at municipal finance and, of course, national urban policies to make sure it's not just at the city, but it's not a race to the bottom in other cities and you have city competition, but there are national urban policies which set a good minimum standard. We have the UN Sustainable Development Goals, which are the icons which are branded around in many places now. These again kind of take a human-centric approach to both climate change and also the social impacts that come with that. There are many frameworks out there which have taken the UN SDGs, the New Urban Agenda, and tried to translate them into various professional practices. Myself, I authored the Singapore Institute of Architects Green Book, which kind of went through a lot of what I'm talking about now, but it also translated the SDGs and New Urban Agenda into environmental design guidelines. To kind of bring about how do we as architects and indeed practicing engineers, surveyors, etc., start to bring these principles into our practice and into our projects. And that involves a lot of communication and putting those professional business plans, professional frameworks in place for each and every project. So we've kind of looked at how do we make that as part of the professional ecosystem so it's done without thinking. RICS themselves have the Advancing Responsible Business in Land Construction, Real Estate, Use and Investment. Now this covers a much broader aspect than the Green Book, because it's beyond the practicing architect, it's beyond that development stage, and covers the links between the business activities, including the investor and valuer, the issues of the UN Global Compact, which deals with human rights, labor, environment, and being anti-corruption, because obviously our industry is one which is quite rife with corruption. And it links it to the individual SDGs highlighted earlier through the development phase, real estate in use phase, and then recovery phase, so the end of life. It maps it out in terms of what are the key issues from land governance, etc., and then pulls together the building blocks in order for us to do that. So looking at having corporate sustainability policies and commitments and how that builds up to have a responsible business in our sector. And this is an extract from that particular book. I'm not going to read it, but you can see how they start to bring it all together. Now, the reason I find that these things are actually quite important is because, again, there's a lot of people out there talking about the Sustainable Development Goals, but are unaware of how their work actually translates to them properly. And I think it's something that as an industry, we need to be a lot better in doing, not greenwashing, but actually going, yes, this is what we really need to consider in order to actually meet those objectives. Within that document itself, there's actually a very useful checklist if you are operating a business to kind of go through, well, as a particular business, when I'm involved in, say, the development phase, looking at transparency and disclosure, do I have this already within my business plan, within my corporate action plan, within my risk management system? So it's a way of making sure it's actually captured rather than just your pure profits and loss and things like that. So the penultimate section kind of drills a little bit further onto the impact in real estate. And again, there's another poll here, which I think will be quite interesting to gauge the audience members. What do you see as being the biggest barriers for our industry? Is it knowledge? There isn't enough knowledge in order to combat the effects of climate change, to provide the solutions in the real estate sector. Is it just the business case? It's just not profitable. There's a disconnect, as mentioned earlier, between market value and climate action, that actually, you know, it's cheaper and I make a bigger profit by just not caring, or by not doing it. Is there a lack of consumer demand? Is it a leadership issue? Is there a lack of leadership in our large firms, in our governments, or even our smaller practices? Or is it that the leadership is there, it just the solutions just really aren't available at the scale that they're needed? Or if you don't agree with any of those, then that's obviously under the other category. I'll give a little moment while I take a sip of water.
We're currently at 23 answers, so we're almost halfway. So please give your answers now, so then we can share your insights with the rest of the group.
Yeah. Just for those students involved, it's not a real test, so don't worry. So that's very interesting. It really seems to boil down to business case and not being profitable, which in my mind is actually a positive, because with having particular levers, which we can discuss later on, that business case can be whether we incentivize or do the opposite of incentivizing and kind of make it unprofitable for businesses to exploit the environment. You know, there are solutions around that piece. So looking at real estate itself, there are two types of risk, broadly speaking, which the climate change is having. The first one is, of course, physical risks. These are the tangibles. So flooding, sea level rising. We've seen over the last 2 years, and even this year coming forward, you know, massive destructive fires on the scale that have not been seen before in the States, in Australia, and in other places as well. And then, of course, the damage from extreme weather events. Now, we're not saying that extreme weather events haven't happened in past, or fires haven't happened in past. It's now just the sheer scale of them and the frequency of them that has increased. And of course, this has significant costs to them, both of repairs, maintenance, reconstruction, gaining insurance in those areas which are known are going to be hit, because obviously insurance companies know that there is a greater risk of having to pay out. So the property insurance will increase. So am I able to get insurance there? And then, of course, there's a downtime, you know, when these storms hit, when these things hit, you know, there's business and economic and productivity loss. In Hong Kong, there's a REIT called Link REIT I was having a conversation with, and they've looked at their business model and their investment strategy. They run a lot of markets, wet markets, food markets, as well as office buildings and things like that. And they're actually looking at, you know, what losses do we make based on these increased typhoons that we're getting and flooding that we're getting in Hong Kong? Because if my marketplace cannot serve customers, I can't get my rental. Then there's a cost of refurbishment. So there's that kind of view of, it's not just about location, location, location anymore, or being in the CBD. Is my building resilient to these shocks? Do I need to invest my capital in it to know that I'm going to get those returns because I'm more resilient? So that's how some of the players around the world are starting to shift to deal with these physical risks. But then there's the more intangible risks, the transition risks, which are a little bit long-term and take a bit longer, and they sometimes catch you by surprise, such as depressed values and growth due to long-term climate issues. So from seafront property fetching a premium in certain areas of Florida to now being seen over time, you know, more and more risky, and thus there's a depression in their property values. Then there's also the policy shifts. You see them coming, but all of a sudden, that when I retrofit my building, it's due. The standard that I need to achieve through the existing building regulation that I may have in my market has gone up. So all of a sudden, that risk and that cost of operating my building, or the change in planning regulations over time, may actually impact the value that I can reap from my land or from my development. And then also we have the consumer shifts. We've seen with Extinction Rebellion, we've seen with more and more brands taking on that kind of sustainability narrative, and some of them are outperforming in the market than other ones in terms of investment and returns. So there are those kind of gradual shifts. Then you also have the costs of energy, water, and even food. So where locations used to be very desirable, where those costs are going up due to the fact that those countries can't produce any of those things, and the imports and the strains on those global supply chains, is that going to start to drive people out? Thus, those fixed assets, which are real estate assets, become stranded. We've mentioned the insurance industry, but this is something that's quite critical because, you know, those involved in looking at risks, climate change, which didn't really used to feature as much of a risk compared to, you know, company profit performance and other social economic indicators. This is becoming a greater risk, and those risks, with every risk, gets priced in. And then there's also the other issue. We can't talk about just pure climate change and risks without looking at social mobility, of people being priced out of markets. The poor who are being increasingly in areas they can least afford to make a living. And what happens to the labor market then? Singapore as an example, we do have a low wage workforce, which comes from international, from our region, doing some of the facilities management work, the construction work. What happens to them? Are they going to be pushed out? An example of a large, I could have picked a number, but given the time, I'm just picking on Lendlease purely because I was at a webinar with them the other day, and they presented some of their aspects of what they're working on. But there are many others. CDL in Singapore has done science-based targets. I mentioned Linkreach in Hong Kong, looking at how they're doing things. Swire Properties. There's many in my part of the world, and there's lots in Europe as well, and even in the States doing this. So here they've got a commitment that they are a 1.5 degree aligned company, and in terms of their carbon reporting, they will be scope 1 and 2. So that's different, kind of looking at what they cover in terms of carbon markets, in terms of supply chain by 2025, and they say they'll be absolute zero by 2040. In the way they're doing this is decarbonisation investment strategy. So again, Lendlease, although they're a developer, they're also a contractor, and they're also an investor. So again, looking at how they invest in things, 100% renewable energy before 2030, collaborating with supply chain partners. So again, is that a commitment? Are they going to say all our supply chain must be zero carbon by 2040? Or is it kind of, we're working with them? Again, it's not really clear. But what they've done is they've also looked at scenarios. So scenario 1 is what they've got, which is no one cares about climate change, no one acts on it, and what does the world look like? So they've mapped out a whole storyboard, and then what does this, through modeling, what would this look like in 2100, sorry. And they've done this for a range of scenarios, including where there is that positive action that, you do go below the Paris Agreement. And they're doing this as they've signed up to TCFD. So it's the development of distinct and plausible climate change scenarios, which allows them to test the resiliency of their organization to those different futures, because they're not in control of that future. They're part of it, but they themselves cannot determine whether the world will hit the Paris Agreement and what that happens. So it allows them to identify at each of those scenarios the risks and business opportunities open in each of those scenarios, so they can start to position their company to take that relevant action. So you see those kind of conversations taking place. And one thing I want to highlight, because you can't really see it necessarily there, is that even their modeling has showed that compared with today, the best case scenario they have is there will be a real drop in GDP. There will be sea level rise. Droughts around the world will be 9 months longer than they are today. And, in terms of a land indicator, will be, almost 40%, well, more than, 40 odd percent worse off in terms of land that's, suitable for growing coffee, which is a kind of an indicator of arable land that's actually useful. So there is going to be huge pressures, even if we meet those high objectives and those really tough objectives in terms of mitigating the worst of climate change. But my thoughts on this are, is there too much planning and target setting and not enough actual doing? Because when we look at, I'm not just picking on Lend-Lease, I'm picking on all, because I think Lend-Lease, what they're doing is quite noble for a large organization. But, we've seen many of such corporate plans over the years, but how many of them have been met, and have they actually been really reported, or are they postponed under this new rebranding exercise? It's, again, lots of people are doing it, under TCFDs. It's suddenly, oh, we're going to meet the UN SDGs through, we're going to do this. So is it distracting from, we haven't actually met any of our previous targets, but don't worry, we're being more ambitious in the next decade. So when you see the dates of when they're going to happen, 2025, 2030, 2040, why isn't it not happening today? Why aren't the plans being going, you know what, by the year end, this is going to be our target, and this is how we're going to do it? So it really forces that rapid business change and that mental model shift within the corporate. And you'll see that spill over to that supply chain as well. So a couple of examples of that impact on real estate that I want to go into. So, we've all heard about the issues for developing countries, but when you start to hear that in the UK, we're going to have climate refugees in the next 25 years, Fairborn is something which is highly underreported, but it's an entire village in the UK that the government has said, look, we can't protect it anymore from rising sea levels. We're just going to decommission it. 25 years, it'll be gone. We're just not able to do it. And that itself, you've got people there who've recently bought property, opened up shops, and house prices, when that was announced, dropped by more than 40%. People are not able to get a mortgage, and now they're in negative equity. So you imagine you've just got your mortgage for 20, 30 years, you're starting to pay it off, and your property drops by 40%. And it's not a normal drop. It's not a drop where it's just a real estate bubble where it's likely that it might rebound in 10, 11, 12 years or so. This is only going to get worse as the time starts to run out and as more and more people will start to vacate. So there are also the social costs of that are very high, but what about professional liability? What about the architects who might have been building there? What about the valuers that advise the bank on how much that property is worth? Did they actually take into account the risks of climate change and start to price that in? What about the banks themselves, or investors, etc.? Is there going to be a lack of public trust in professionals going forward due to this? Another example at the other side of the world was Sydney, and this was reported in Bloomberg News quite recently. This is what I mean. You can get wonderful articles about what's actually happening in news outlets which you wouldn't have normally expected. So we all know, and that was widely reported about the heat wave they had in Australia and how unbearable the temperatures went. In fact, they ran out of colours on the heat map on the weather channels because it was just so hot. Yes, that may have been a freak year, but the suburbs themselves, where more and more people are moving towards because the cost of living in the city is too high, and also with the population growth currently happening in Sydney, the temperatures there are melting roads, and that's not just a one-off. The housing quality is quite low, built by the private sector. So again, the business case perhaps of designing and building a house which is resilient to those that excessive heat isn't being done, where it's single glazed black roof properties crammed together with little greenery to offset that kind of, or reduce the urban heat island. So you can see those kind of problems, and they're really coming out. So will those properties become stranded assets in the future? Because if it becomes unbearable to live in, again, who's going to want to live there? Or is it going to be the cost of refurbishment that becomes so great and prohibitive that these suburbs end up disappearing? But on the other scale of things, this is a case which was heard in the States, and it went all the way up to the Supreme Court, where there was positive regulation by an authority to say, look, actually, you can't build on this piece of land. We've designated it for beach protection because we know that we are getting storms coming through. And by developing here, it is actually damaging the storm defense, and it's going to cause potential damage further up the beach, higher up on one of the islands that these properties are being developed on, and that is actually going to cause a public nuisance. So the court said, okay, yeah, good justifications, but this developer said, well, hang on a second, I've lost my rights to develop. The US has rights, property rights, which is a little bit different than European law. So it was considered a takings. You know, you've taken my right away, I deserve compensation. And you know what? The state lost the case, and the state had to pay compensation to the developer for depriving him of his property rights. So you can imagine that the regulator going forward would now be quite worried that they could be sued for taking positive, climate positive regulations, which were actually being, you know, based on good science. And the court acknowledged they were based on good justifications and they were right to adopt the regulations, but it ended up costing the local council a lot of money. So you can imagine that and the impact on the willingness of state actors or federal actors wanting to actually start to regulate and raise their regulations. One of the justices did actually disagree and said, look, it is a public nuisance. And the court failed to understand how a building could be considered a public nuisance. Because if it was defined as a public nuisance, then compensation would not have to be paid because, you know, you have no right to cause a nuisance. So, you know, the point was that by building there, actually houses which are built there reduce the protection of property, endanger life, and in fact, quite often those properties are whipped up by the wind and used as battering rams further up, which wouldn't have happened. As the wind hits landfall, it actually dies down and it has the natural breaks from the sandbars and things like that. So you can see the kind of opposite end of the scale there. So coming quickly to the close, I'm looking at it quite critically that, you know, much of what we do, whether it be in real estate sector, as architects, as engineers, as investors, in fact, in what we do in our daily lives is really complicit in sustaining the multiple drivers of Earth system destruction and socio-ecological injustices. In particular, our industry has really not been sufficiently ambitious to deal with the increasingly assertive and destructive modes of urbanization and economic growth that comes with that. We are under scrutiny. Global governance is under scrutiny. It is polarizing, as we've seen in certain countries, but there is growing public resistance to the business as usual approach. And I think we should all be cognizant of that and start to act on it. In terms of acting on a crisis, you know, there is one unfolding. What has been the first time I presented this slide, I've actually had to edit it, was actually in February. But, you know, over the last 11 months, there has been a crisis and it's being dealt with various degrees of capability around the world. But let's not kid ourselves, it has been dealt with in terms of there is a lot less international travel. Could you imagine a policy call to ground most of the world's flights, you know, for climate change, for example? It wouldn't have happened, but with this it did. So we are able, again, to take within levels, to take immediate action. And I think with climate change, we do, even though it's creeping up on us, we do need to start taking immediate action. There is a delayed response, and we've seen that with COVID. You know, you instigate a lockdown, cases still go up. So people think, well, the lockdown isn't working. But you look 3-4 weeks down the line and you see those cases start to drop off quickly. So, you know, there is always that. So with climate change, it's a longer term thing, but we do need to act and we can do it. And we've seen that there can be global action. The question of the UN Sustainable Development Goals, is it actually the unsustainable development goals? Because it does continue with that growth as normal and it is very human centric. You know, are we still prioritizing social and economic development at the expense of global Earth system integrity? And that is a question that, you know, when we go back to that diagram I had of the circles and the link between them, are we too much focused on the socio-economic factors and not so much on the environmental factors? I would argue that actually it does form a framework which we do need to engage with. It's there, it's already been ratified by the majority of governments and NGOs around the world. So let's start to work with them. And just as the RICS has done, just like the Singapore Institute of Architects has done, we can translate them to what we think that they should be for our industry to act upon. The final one is, you know, it's not what we can do, it's what we must do. And I think at the center of it, we must acknowledge that we all have professional duties, responsibilities that come with us. And we must be bold in transforming our diverse work for the good of the people, the good of the planet, and of course, the good of the work that we do for our own satisfaction. Personally, I think what we cannot do is preserve the status quo. And I think if we do that, we all need to be comfortable with the fact and accept those responsibilities that come with that decision, that we are preserving the root causes of the socio-ecological crisis that we find ourselves in today. And I think whilst words alone cannot change behavior, better words can prompt better behavior. And I think, you know, through these discussions, and can translate to a framework for and means for us to actually start to deliver on those systemic changes ahead and start to become the solution providers for a more ecologically sound world. So yeah, that's pretty much it from me. Sven, do you want to launch the first poll again, just to see if I've managed to convert some of those undecided over to do you think it will have an impact, you know, in the next 10, 15 years, or done the exact opposite, which I dread to think has happened? So if everyone could kind of just answer that poll, just do you think climate change will have significant impacts on real estate values in the next 10 to 15 years, given what I've presented in terms of the multiple drivers from governance, investment, reporting, etc.? So yes, no, or if you're still on the fence, say so.
Well, Benjamin, I think that you've managed to convince even the last hesitant people that at least there will be an important impact. Even if there are some people who are yet undecided, I think it has become clear that the majority of people do understand that on the, perhaps not tomorrow, perhaps not the day afterwards, but on the mid to long term, there will be an important correction with regards to real estate valuations. And perhaps this might be the real core of the matter, which I would like to discuss together with you and together with all of you. So if somebody has an insight or a question, please be invited to drop it in the chat, and then I will try to discuss this with Benjamin. But today, if we're looking at the presentation that we just saw by Benjamin, I think that we all agree that we have passed the point of discussion regarding whether climate change is real or whether it is the result of human behavior. I think that the causal relationship between human pollution, between CO2 levels and global warming and climate change, that they are clear and undisputed. I think that they are scientifically demonstrated and that there is no debate anymore. Yet, we know that the world will heat up, and it will heat up for more than 2 degrees Celsius. This is became very obvious and very clear, and it cannot be offset anymore. So we will need to handle the results of this. We will need to address how we will react to this changing situation. And yet, I see that on the short term, it has become, or it still is very difficult for people to self-motivate to do the right thing or to invest in sustainable actions. It has become a very almost schizophrenic situation. there is little action of the industry, of the sector, while everybody, as demonstrated by the first poll, agrees that there will be a significant correction. So it's a very strange situation. It's a bit like smokers outside the hospital doors. There is no immediate result or consequence in smoking cigarettes, even for people who are already confronted with serious illnesses or with serious situations. And a second explanation of why this is not happening. First one is the delayed time between an action and the consequence, and the second explanation might be the fact that it is perceived as a collective problem and not as an individual responsibility. Somebody else will do it, or a government will need to take action and to impose legislation, and then everybody else will do it. Or why should we do it if another nation is not committed to the same efforts? Those are real barriers to action on the short term. What is your stand on this, Benjamin? Do you see motivations, how that we can self-motivate, how that we can change business model, change the industry look on things to take action more on the short term?
I think, well, to touch on, and it's also linked to one of the questions I can see from Bruno about political leadership given the strength of some industries. I think you touched on it a little bit there, which is, you know, it's known as the free rider issue. As an individual, if I take someone to court, which is why in the legal system you don't see very many representative environmental cases going through, because as an individual I can see something impacting my quality of life. If I take the cost, and it does cost, to seek to solve that injustice, other people are going to benefit from my cost to do it. So it's a free riding issue. Whereas special interests or industrial interests, they actually have a benefit for taking things to courts to challenge. And that's why you're seeing challenges at the administrative level of environmental policies and things. It's like, oh, you're over exercising your powers, you're flexing your administrative muscle too much, because there's a lobbying group, a special interest group there versus, you know, the common good. So there is something that needs to be broken down. And I think that's where the first one, which you mentioned, the transboundary issues, the Paris Agreement started to try and do it, but that's where we need that UN Global Pact to come in. The World Trade Organization has some transboundary issues. So, for example, let's look at the EU and the States with the beef growth hormones. The EU said, no, we're not taking those in because we think there's a public health issue. The US said, no, there is no health issue. We've proven it. So there was, and then, you know, eventually the EU lost, and then they won because actually the qualitative method that it can do harm, you haven't proved that it doesn't have that potential. So there are, and that then with environmental impact, tires going to Brazil, the EU lost a case there because they wanted to say that you can take our you know, retreaded tires, and Brazil said no, they have an environmental impact. So there are certain trade agreements and to cover that, but it's not extensive enough. And that's where the UN Global Pact will come in and look at those kind of externalities and those third-party issues, that your pollution is seriously affecting my country. Yeah,
I understand that we indeed need we need a sort of global solidarity and a united stance on how that we will address this, because indeed, as you say, the free rider perspective is, if one nation does not abide with these standards, then all the other nations perceive this as an unfair competitive advantage. While, as you stated,
exactly.
And I think you might win on the short term, but we will all lose out on the long term.
Yeah.
Yet,
sorry, I saw another thing about RICS giving guidance on evaluating the externalities. There is a review going on our standards and regulations and sustainability, such as this, including valuation standards. This is a big part of it, because the current standards are very good at giving real estate values and including the sustainability of that real estate asset, as in that asset, and nothing really more than that asset, other than a kind of a little boundary outside it. It doesn't deal with how the products from that building come from somewhere which is just totally decimating lives and rainforests. So that's something that does need to be expanded upon in our industry.
In order to really shift the paradigm, I think that we indeed need to internalize the value chain, and accurate valuations, as you state, are perhaps and most probably are key to change the current business. Today we are still in business as usual until it can no longer be postponed to change. So indeed there might be and there will be new business models that will arise from this crisis or from this challenge. Perhaps Tesla is a nice example of such a innovative new business model. They changed carbon fossil cars to electrical cars, and in, let's say, I don't know, 10 years or so, they have become one of the most world leading and highest valued car manufacturers. So there are a lot of opportunities and possibilities as well. Do you see opportunities arise for the residential or the real estate sector that we could use as a motivation or as a leverage for real estate actors to do the good thing, to do the right thing?
Yeah, I think so. But again, I think it's doing less bad than doing good. So looking at green building rating tools as an example, it's something that I've been involved with for the last decade, and I'm currently revamping the Singapore rating tool, Green Mark, and what we've seen from empirical studies is both for residential and non-residential buildings, there is a slight premium in terms of rental yield. So they do get higher rentals, they do have higher occupancy rates, and in terms of satisfaction from residents, in terms of their user satisfaction or complaints about the building, they tend to be lower. Whether that's the process of going through a green building rating tool and or whether it's actually the fact that by doing that they've actually gone, we need to spend a bit longer on design and we're a bit more aware of what we're doing, so just rushing something out purely for that. So perhaps it's the process rather than the actual following the rating tool recommendations or performance levels. So there are that, and also looking at financial markets. In fact, a lot of sovereign wealth funds have started to divest from fossil fuels, and they've seen that the biggest returns have been coming from, or the biggest growth have been coming from greener or transitional funds or industries. So that's where you're getting kind of higher returns as an investor. So that means, why would I put my money in something which isn't giving me a return? So pension funds in the real estate industry are actually the biggest investor in our industry, actually. So once you start to see that shift, whether it be through REITs, whether it be through those larger developers, I gave the example of Lendlease, you'll start to see those kind of shifts, and that may, in the long run, with consumer requirements and demands, start to shift the market. So there is that silver lining in terms of doing less bad, but is it enough to actually get to where we need to be quickly enough? Yep. I don't think so.
It's a bit of the same dilemma, or at least in Belgium as well. We see, for example, BREEAM, which is a real estate sustainability certification. We have seen that it has been adopted as let's say, almost market standard for the AAA offices. But on the other hand, we see that in cheaper developments or developments at less attractive locations, that those most of the time do not have those certifications. So we indeed saw that it leads to a better development, and it leads to a innovation in the real estate market, but it might not be enough. And this is indeed quite strange, because the fundamental value is there. As you just said, it is demonstrated in studies that it leads to higher valuation, that it leads to higher occupancy rates. But yet again, we are, as market actors, yeah, there's still a barrier to really go for it and to really invest in those items. So I think it will be a big challenge for the industry to accelerate this dynamic and to accelerate into those initiatives, because as I understood from your presentation, it's not like we have a few more decades to slowly evolve towards a carbon neutral society. I think that we need to act fast. And therefore, I think as well, or it is my feeling as well, that we have a need of a strong global regulations. And I hope that your initiatives and your policy influencing can help us in getting there and getting to a combined, globally unified regulatory system. I see a question coming in from Nikki Vissers. We are all focusing on our own working domain, but shouldn't we all globally focus more on attacking poverty to be able to globally change our climate and focus less on profit and costs? They should be stimulated by governments and a UN level. How do you stand on this, Benjamin?
Well, I mean, yeah, climate change and exploitation are going hand in hand, because, as I mentioned, you know, people. One of the reasons that we haven't collectively acted so much is because it's not in our backyard. Until recently, you know, the heat waves and forest fires and things like that. I mean, from a Belgian perspective, you know, gets to 34 degrees Celsius, time for a margarita kind of thing, instead of, you know, 50, 60 degrees Celsius, and forest fires and things like that. You know, let's be honest, if it doesn't affect us directly, we don't really care that much. It's out of sight, out of mind. That's part of it. The next thing is we do have an addiction to cheap goods, and those are in a global supply chain. We are based on a consumer society. So I do agree that, you know, that's why I critique I borrowed Louis Coates' his critique on the UN SDGs as a way of still enabling all of this, because it's still about growth and consumerism, rather than, as you say, attacking the real underlying issues of poverty, people's worth. You know, farmers should be the richest people on the planet because they provide the sustenance to us. And yet it's the richest people on the planet do frivolous things, in my opinion, you know, futures contracts, trading futures. I mean, what's that about? People make money changing exchange rates, you know, betting my exchange rate for this is going to go up. I mean, what value does that give, really? I mean, nothing. And we're in a bit of a trap, because how many of us want to give up, you know, a new computer?
Yeah.
How many of us want to give up, you know, affordable clothing? And it all comes at that cost. And this is where we are seeing niche business models come up. So, I mean, to give you an example of Tesla, I mean, I still think they're probably still exploiting many parts of the world in their supply chain. But if you look at certain clothing brands, you know, you have fair trade products, and they've been going around for some time. So there are those kind of things to do it, but they're not quite mainstream. I really don't have the answer, unfortunately, but I do agree with Nikki's point that, you know, it is all interrelated. This kind of cheap goods, disposable lifestyle, consumerism gone mad, which we're all guilty of, and I'm no less guilty than anyone else of it. I try not to be, but, you know, we all are. It does need to change, and how do we change that? And that's where that collective action needs to come in, and whether it's incentives. So, you know, the earlier poll showed the cost of acting more sustainability is sustainably is there is a cost premium to it, when actually there shouldn't be a cost premium to it. There needs to be policies that make that cheaper, so it becomes a behavioral shift automatically. With the right kind of balance of incentives and regulatory stick, we can get there. But it's going to take a lot of time, and I've just talked a lot without giving an answer, so I'm really, really sorry for that. But absolutely spot on in terms of that observation.
Mhm. Yeah, it's an incredibly difficult topic where there are a lot of challenges, but very few solutions that can tackle all those subjects. There is not such a thing as a technical fix. It's not just do this or do that and do that, and then we have a solution for all the problems in the world. Of course, this is not the case.
Yeah.
But
I think
we're in a very, very conflictual situation where almost everything that we do will have consequences, and it's almost about choosing the thing that has the least worse consequences.
Yeah, and I think that's where the transparency comes in through things such as TCFDs and ESG reporting when done properly, not greenwashing, of course. But the other thing is, as we've talked about earlier, the valuation of the true cost of things. If we put a dollar value to every single tree on the planet, you know, its real worth, not just a notional market worth. We can work it out. I think someone works it out in the 1990s that, you know, that there isn't enough money in the world to pay for the natural systems, the natural ecosystem, and what it does for us. I think they valued it in a number of trillion of dollars, and I think it was double or triple the global GDP at the time. So if we start to put that value on, and like I say, start compensating fairly countries which have those wonderful natural resources, so they don't exploit them to follow the American dream, the British Industrial Revolution, the German manufacturing, and so on and so forth. But actually, kind of, they are compensated for the services that they provide the rest of us. So it becomes that redistribution of value. And also for the production of, say, plastics and wastes and things like that, we all pay for their disposal. They're cheap to produce because they're produced somewhere where there are no environmental regulations. So again, it's pushing that problem somewhere else. They come to us cheap, so we can buy them cheap. And the disposal, every single one of us pays our taxes for municipal waste, right? So that cost is not given to the producer. So there's that split incentive as well. So once we start to readdress those, I think that's where that kind of global harmonization, if it can ever happen. I mean, Europe's kind of breaking up, which is a really big shame, you know, but we have such great potential to work well together. And it's not like we don't know some of the solutions. And once you start to get some of those solutions, you start to get more and more of them coming forward. It's just that inertia. It's that interest gap, I think.
I do absolutely agree. On the one positive note on this matter is that everybody agrees, and that we all feel that within this and a few years that society will evolve, will change, and there will arise opportunities for people to intelligently invest in certain segments, to intelligently do the right thing, and to also gain some money and make some profits in doing it. So it will create new opportunities, and it's a crisis that we must not waste. We mustn't waste it for our children and for the future. And I can only hope that some people are motivated to also see the financial benefits in doing the right thing, and that we can have enough political leadership and even leadership within our companies and within our academic institutes to help drive the political class to make bold and brave decisions and to change the world for the better. Perhaps Benjamin, unless somebody has some last or final questions, I would like to thank you for your interesting presentation. It's an inspiring speech. It's not the most motivational matter.
Apologies.
But I fear that it will be a subject and a matter which with which we will be confronted very closely in the future. And thank you very much for your contribution to this debate.
Okay.
On behalf of the Antwerp Management School, I would like to thank all participants. I hope you enjoyed it. I hope it has been inspirational, and I hope to see you again in one of the next disruptive sessions. To the MRA participants, I would like to wish you all the best during these challenging times. I hope you really enjoy the experience. It's a very motivating and inspiring time, and please make the best of it, and all the best of luck. See you next time. Bye-bye.
Thanks very much.